There are many opportunities in multifamily investing in secondary and tertiary markets. If you have good, strong underwriting, these markets can yield some significant benefits. But to realize the returns, you really need to assess these opportunities differently than you would in a primary market deal. So here are my 5 best practices for investing in secondary and tertiary markets. Number 1, meeting supply where there is demand. In any market, you can't ignore the fundamentals like job growth and migration. However, the lack of multifamily housing supply in a secondary or tertiary market is not usually covered in the press. These markets attract fewer developers than the primary markets, even if the fundamentals are there, such as maybe the addition of a medical center or an expansion of a university. But it's developments like this that can create a stable rental market and an opportunity. Getting into a market where you can pick up a B or a C class value add deal to support the influx of new renters can create an opportunity for investors like you. It's also worth noting that there may be a case where the local government makes it expensive for builders to get in and developers to get in to help build it up. So it makes those B's and C's a little more in demand as well. So you have to keep that in mind. Number 2, stay close to the property. Having boots on the ground at the property is a key factor. In the last recession, many out-of-towners did not understand the market they were invested in when the market got soft, they got hurt. Some of these owners very rarely visited the area and the property, so they weren't in a position to address any challenges in their primary markets. But this problem becomes magnified in a secondary or tertiary market. So with that said, if your plan is to buy in these markets, driving or flying to the property on a regular basis is absolutely paramount. Doing so allows you to also meet other local sellers and investors that like the area, and it gets you intertwined with the market. You'll be able to stay up to date with what the other sellers are doing and what they're unloading, and it also might be an indicator of something else that might be going on. Might be time to unload yours. And trying to do all this remotely is very difficult. Number 3, don't underestimate the home court advantage. Often active investors in a target area, they're connected to other owners as well. So they have a deep understanding of the vendors and they work with them closely as well. This investor also knows the local politicians. They attend their local PTA meetings. They go to the country clubs. They're very intertwined with the community. As an outsider, maybe from a large city with loads of money, you may be sophisticated in their underwriting, and even handling large deals, but people like to deal with people like them, or at least are familiar with them. So staying in tune with the local market, visiting these places where these investors attend could help offset that home court advantage, because now you become one of them because you're active in the community. And number 4, unconventional ways of learning the market. When you're first walking a tertiary market, for instance, getting a view from Main Street can be a very telling sign in what's going on in the city or town. It's better to see with your own eyes what's going on instead of pulling data from a spreadsheet from 4 states away. You will want to get in front of people to see what they think about the area and about any rumblings about any new business maybe moving to the city. A bartender at a local hotspot may provide you with more info on the scene than because they're usually in tune with the lifestyle of what's driving the city itself. And number 5, look at the suburbs. Many local jobs have migrated to the suburbs, fueling renter demand. Typically, there is not much in the way of mass transit, and it should be considered in your target tenant market too. So especially if they're lower income, make certain to consider jobs in proximity to train and bus lines, but be wary of walkability factors until you experience the actual walkability on your own. There are many renters that live in secondary and tertiary markets by choice. Treat them well, and they'll stick around for a long time. So what practices do you employ that I didn't cover in here? I'd love to hear from you. Please leave them in the comments, and would enjoy talking to you about it. Hope you're having a great day, and I'll talk to you again soon. Bye.